Hello, today is Friday, June 12, 2026. Here is your daily signal. According to Fortune, an unusual cross-ideological shift is underway as both Donald Trump and progressive Democrats like Bernie Sanders talk about Americans securing a public equity stake in AI, opening debate on whether public ownership could ensure wider benefits from artificial intelligence. AI development and deployment are increasingly shaped by competing models of public versus private ownership, with advocates for public models arguing these approaches offer greater democratization and control, while private strategies center on corporate profitability and influence. Major U.S. lawmakers have recently revisited government and public equity proposals for leading AI firms, echoing global trends where state-driven and private investments are accelerating, especially in the U.S., Gulf states, and Southeast Asia. On June 9, 2026, Fortune reported Donald Trump and progressive Democrats are now openly discussing some form of public equity stake in the AI sector, aiming to return benefits to citizens. Gulf states including Saudi Arabia and the UAE are investing heavily in public AI infrastructure, signaling intensified state involvement. Meanwhile, the Associated Press announced FPT and Amada Group signed a memorandum to drive large-scale AI transformation across Southeast Asia's industrial parks, combining private and institutional resources. Near-term effects include increased political debate and the prospect of legislative proposals for public stakes in AI companies, while state-led investment is expected to elevate global competition among the U.S., Gulf, and Asian markets. In the medium term, regulatory uncertainty and shifting power dynamics between governments and private developers could realign incentives, potentially slowing innovation but increasing public oversight and direct citizen benefits. Next, on to the lessons learned from major tech IPOs like Facebook, as SpaceX readies its own historic offering. Business Insider highlights how investors worry that SpaceX's upcoming IPO may echo the pitfalls of Facebook's 2012 offering, which saw valuation mismatches and business model risks shake confidence. Facebook's IPO became a landmark event on May 18, 2012, with a $104 billion valuation fueled by unprecedented investor hype, but served as a cautionary tale as tech IPOs regularly face uncertainty from untested business models and regulatory scrutiny. SpaceX, led by Elon Musk, is preparing for launch amid intense comparisons to Facebook's offering, while Gulf sovereign wealth funds such as Mubadala and Saudi PIF are in line to receive a significant windfall. On June 9, 2026, Business Insider warned that SpaceX could repeat Facebook's mistakes, and Fortune detailed how Gulf funds are poised to benefit significantly from the listing, as Business Insider also noted ongoing analyses around risks as OpenAI readies its own public debut. If SpaceX's IPO faces valuation challenges, early investors may see substantial volatility in pricing. Gulf sovereign funds could see immediate balance sheet improvements. Medium-term, IPO missteps may prompt tighter regulatory scrutiny, affecting future tech listings and potentially adjusting global investment flows, especially in the Gulf region. Finally, we examine the rise of alternative venture capital models and the changing landscape of startup investments. TechCrunch reports that Justin Earnest, founder of Sabretooth VC, invested nearly $400 million in high-growth startups including Anthropic, Anduril, and SpaceX by bypassing traditional fund structures in favor of a captive network of limited partners. These alternative models leverage direct investment networks to facilitate rapid capital deployment, enabling backing of startups outside the conventional VC frameworks and reshaping how early-stage companies secure funding. Sabretooth VC operates entirely with a captive LP network, rather than raising formal funds, as revealed on June 9, 2026, when Earnest disclosed his nearly $400 million in investments. Sabretooth VC's network has invested in hot ventures such as Anthropic, Anduril, and SpaceX, allowing startups to access capital more quickly and efficiently. In the near term, startups may benefit from faster access to resources, while traditional VC funds could face competitive pressure as investor relationships grow more central, potentially concentrating capital among savvy, well-connected founders. Regulatory scrutiny may intensify as this non-traditional structure becomes more prevalent, changing the dynamics of venture investing. Now, onto the markets. International markets showed broad gains, led by Netherlands with EWN jumping nearly 7% month-on-month, while Australia saw the top daily move with EWO up 1.5% and China large-cap FXI also advancing despite a sharp monthly decline. Space Exploration Technologies SPCX soared more than 670% today, marking the biggest gainer among all stocks, while Pop Culture CPOP slumped over 80%, standing out as the steepest loser. Commodities traded mixed. U.S. oil USO dropped 2.2% for the day, while gold edged up 0.2%, and uranium URI gained over 1.6%, outperforming most metals. Among major favorites, AMD surged 6% today and 16% month-on-month, while Adobe fell sharply by over 7% in daily trading, with Axon also declining despite strong monthly gains. The S&P 500 index SPY recorded a steady daily increase of 0.5%, driven by semiconductors stocks up nearly 2.3% and finance sector XLF gaining just over 1%, while healthcare Roman 45 remained almost flat. Top gainer SPCX and top loser CPOP highlight the volatility in today's session. That's it for today. You can find more news and details on our website. Goodbye.